This is Asia Trade. I'm Shery.
And I'm Avril in Tokyo with Shery. Here are your top stories this hour. Asian stocks set for a positive start to the week, with Wall Street at fresh record highs on prospects for further interest rate cuts.
Sentiment may also get a boost from President Trump's call with Xi Jinping, with the TikTok deal almost finalized, and the leaders now set to meet next month at APEC in South Korea.
Plus, U.S. tech firms issue travel warnings to immigrant workers as Trump moves to slap a $100,000 application fee on a widely used visa.
And we have a very interesting week ahead for you, especially with Avril here in Tokyo. Welcome to Japan.
Great to be here, finally, in the same
our
studio.
New studio.
Exactly.
So it's perfect timing.
In the same city, finally.
Finally, it's been years, right? We've been with us for a couple of years already. But really, a lot on the agenda, especially here in Japan, as we're seeing the leadership race also heat up. We're seeing the economic policies coming from Shinjiro Koizumi, Takaichi as well, Tokyo CPI numbers later in the week, and of course, plenty of eco data, especially from the U.S. as well.
Yeah, and after what the BOJ signaled just on Friday. So it's also the shaping up to this 80th UN General Assembly that's going to get underway in New York, where Trump is also set to speak on the first day. It's all coming against the backdrop of really complicated geopolitics, right? We've been hearing from the likes of the UK, Canada, Australia. They're formally recognizing the Palestinian state. So it does, make you wonder how all this weighs into the rest of the week as well.
Yeah, especially given that we are seeing in the markets how geopolitical premium can change things, right? Especially at a time when we're not quite sure where the Fed will go in terms of rate cuts. So that reassessment of federal rate cuts is also what's leading to these changes in the markets. We are expecting to see the underlying price inflation for the United States, the core PCE numbers, very, very consequential, of course, when it comes to the Fed's rate cut decisions, 2 implied in the dot plot already. We also have, of course, the CPI numbers that I mentioned here in Japan. BOJ policy decision last week really moved the markets consequentially, but you said it, it's going to be the UN General Assembly, geopolitics, and I'm so happy not to be in New York at that week where the traffic is crazy.
Yeah.
Yes.
And we're also hearing how, to your point about the Federal Reserve, it's quite interesting how the UN Secretary-General Antonio Guterres has also talked about the importance of emerging markets. Take a listen.
Every single day, these emerging economies represent a larger share in the global wealth. Every single day they have more influence. And we need to adapt our institutions. We need to adapt the UN, the Security Council. We need to adapt the Bretton Woods institutions. We need to adapt all the governance mechanisms that exist in the world.
We'll be watching geopolitical risk weighing the markets. We have already seen oil prices holding at that $62 a barrel level, and you can see U.S. futures at the moment not doing much. But after rising to record highs, we're talking about the S&P 500 topping 6660 on Friday. Tech still leading the charge, a $15 trillion rally from its April lows. We have earnings season right around the corner. You can see NASDAQ 100 futures not necessarily doing much, but what we're watching is also the dollar, which has really tracked yields higher as we continue to see this reassessment of where Fed rate cuts go from here.
And it's also interesting, I guess, when it comes to domestic policy out of the U.S., right? Not just about these relations with China. We're seeing how the U.S. president is planning to impose a $100,000 fee on the H1-B visa program. And that has triggered confusion for corporate America. It's warnings for workers that have come in as well. And this is even as the White House clarifies that the fee will only affect new visas and not renewals or current holders. For more, let's bring in Bloomberg senior editor Wendy Benjaminson in Washington for us. So, Wendy, what do we know about this? Is there a chance that this potential announcement could be reversed? How are tech companies in the U.S. reacting so far?
Well, I doubt there's any chance it's going to be reversed. What they did do, however, this weekend is clarify that this new fee applies only to new visa applicants. So anyone who has an H-1B visa, who is in the United States now, or even traveling, or if they're even up for renewal, but they have an H-1B visa, they are not affected by this new fee. This will be for people who win the so-called visa lottery, that will happen early next year. When those people get that lottery, they will have to come up with $100,000 or their their company will have to come up with $100,000 in order to move to the United States. But they didn't really say that in the initial rollout, so there's been a lot of confusion and a lot of panic, not only among companies who need to pay these fees for their highly skilled and professional workers, but also among foreign students who are going to have to figure out how to continue their educations in the United States or start an education in the United States and come up with $100,000 to do that. That's going to be very difficult. We have talked to H-1B visa holders around the country. One of them is a government worker in upstate New York who makes $50,000 a year, so coming up with $100,000 would be nearly impossible. So it has caused a tremendous amount of confusion.
This coming at a time, Wendy, when the U.S. president wants to bring more investments into the United States, coming at a time when really brain drain is a key concern. Could this backfire?
Yes, it could backfire. In fact, India has been, we are talking about this today, Indian citizens make up almost 3/4 of the H-1B visa holders in the United States. And a lot of them work for IT outsourcing firms. And a lot of them also work in engineering and other highly skilled professions that require them. And so, yes, this could tremendously backfire if those jobs cannot be filled in the United States, if companies decline to pay the fee. So yes, it could be a brain drain for the United States. Some countries have sort of said, well, that's great. It'll stop the brain drain in our country because we'll be able to keep these people home. But do they have the jobs? Do they have the industry? And also remember that Trump had said that the tariff regime would bring jobs and foreign companies to the United States to invest. But as we saw with the Hyundai plant immigration raids a couple of weeks ago, if those foreign workers are then rounded up as undocumented immigrants who must be deported, I mean, what company is going to take a risk of investing in the United States? So this is a big, risky move on the White House's part.
Wendy, separately, Trump speaking at the Charlie Kirk Memorial Service. I mean, what do we know about how this has also been sort of an incident where it's galvanized the conservative base?
Well, this memorial service certainly put a bow on that, galvanizing the conservative base. For 6 hours now, they have been talking about Charlie Kirk in the terms of being a Christian martyr. It is a very unusual event in that you have top government officials. You have President Trump, who is speaking right now, the vice president, top cabinet members, the Secretary of State, all speaking in these deeply religious Christian terms about their movement, about Charlie Kirk, and the work that he did that they vow to continue. Everyone was extremely disciplined during this speech and not using a lot of "we're going to get back at them" or revenge rhetoric. Trump is speaking now and has said things like, Charlie Kirk loved his opponents. I hate my opponents. I'm going to go after them, and that sort of thing. So we don't, and we had the incident last week where Jimmy Kimmel's show as a late night comedian was put on hold indefinitely after the FCC threatened to pull the license of the parent company to air the show. So we are starting to see retribution, the blame of Democrats and the left for Charlie Kirk shooting, even though we know that this was a lone shooter who was upset about personal things.
Wendy, thank you so much. Bloomberg senior editor Wendy Benjaminson in Washington. Now, President Trump says the U.S. government shutdown is likely, citing a stalemate between his party and the Democrats. Senate Democrats and Republicans each blocked the other party's rival plans to provide temporary funding, moving closer to a shutdown on October 1st. Senate Democratic leader Chuck Schumer is urging President Trump to negotiate.
We are hoping that he will negotiate with us.
And if he doesn't?
So far, he hasn't. And we've had 2 bills in the House and Senate, and neither of them have passed. Our Democrats are firm. We need to get something done to relieve the distress the American people are in.
And President Trump says he will meet with Xi Jinping next month on the sidelines of the APEC summit in South Korea. It follows the Friday phone call, which Trump says delivered progress toward finalizing a deal over TikTok. Let's bring in our chief North Asia correspondent, Steve VanEck. Steve, so what does progress actually look like here?
Well, they talked, and that's a good thing. And then they're going to meet in person for the first time since Trump took his second term. So that is good as well. And they've also come to basic agreement on the TikTok deal that has been obviously up in the air for quite some time. It's actually something that even Donald Trump himself has flip-flopped on as far as, initially opposing it and now agreeing to it to keep it in U.S. hands. And that's what, according to the White House spokesperson, the deal is pretty much done. It just needs to be officially signed, and that deadline for that deal to be finalized has been extended again till December 16th. But I think you can kind of put that to the side now. That is done. Now we're going to prepare for this meeting on the sidelines of APEC. But let me just run through some of the details of how TikTok in the U.S. is going to look like. The U.S. operations would be majority owned by Americans. Of course, we have that consortium of U.S. investors that include Oracle, Andreessen Horowitz, and Silver Lake Management. Trump says the U.S. would retain tight control over the app, including the much scrutinized algorithms. Oracle will act as TikTok's security provider to store Americans' data in the U.S. with no access by China. Also, the board composition will be essentially 6 of the 7 board seats will be Americans, and the parent company, ByteDance, will be able to appoint the 7th board member, but they will not be a part of the security committee. So it looks like this deal, checks all the boxes for Trump. Probably as well for China. They want to move on and get into the bigger picture about trade, and that's something that also dominated that phone call on Friday.
Yeah, the hope is that this TikTok framework paves the way for the U.S.-China trade deal. We know how a high-level U.S. congressional delegation is in Beijing. What can we expect from that?
Yeah, well, I think this is important as well. This is the first time such a high-level House committee meeting trip to China has taken place. I think Chuck Schumer led a Senate delegation a couple of years ago. But again, it's good that you're getting face-to-face interaction between China and the United States after quite some time of acrimony, if you will, especially after Liberation Day and the uncertainty of those tariffs. Granted, the tariff situation and the fentanyl issue are not resolved yet. Trump and Xi did talk about those issues. And again, they'll have a chance on the sidelines of APEC at the end of October, maybe the first day of November, to further progress on some sort of agreement, perhaps an extended or permanent trade truce. Whether those tariffs come down or not, it's unsure. But again, it is a good first step that this congressional delegation is in China. They arrived late yesterday, led by a Democrat, by the way, a former House Armed Services Committee Chair Adam Smith. And he met as well, the delegation met with the Premier Li Qiang in the Great Hall of the People already, so on day one. So that is also a good sign. Smith basically echoing the sentiment of Li Qiang that it is a good ice-breaking trip, and that Smith says they hope that China and the U.S. can peacefully coexist. But he did voice concern. It's quite concerning, he said, that the two militaries do not have much communication. But that's been a norm for quite some time.
Our Chief North Asia correspondent, Steve VanEck, there. And, of course, we do have plenty more geopolitical headlines coming from New York as we head towards the UN General Assembly meetings. Australia, Canada, and the UK formally recognizing a Palestinian state ahead of the UN meetings this week. Leaders of the 3 countries call it a coordinated push for a 2-state solution. The move has drawn criticism from President Trump and Israeli Prime Minister Benjamin Netanyahu, who argue that it rewards Hamas and threatens Israel's security.
Meantime, Shery, President Trump has renewed his call for European countries to stop buying oil from Russia. That's a demand he's linked to pressuring Vladimir Putin to halt the war in Ukraine. Russian forces have stepped up their attacks since the two leaders met last month in Alaska. And sources close to the Kremlin say Putin thinks military escalation is the best way to force Ukraine into talks on his terms, with Trump unlikely to act.
The Taliban's top army commander has rejected President Trump's demand for Afghanistan to return the Bagram air base to U.S. control. He warned that any hostility would trigger a strong response, saying Afghanistan is governed by its own people and not dependent on any foreign power. Trump on Truth Social earlier threatened bad things for the Taliban-led country if it failed to comply with his demands. We have more ahead on the Asia trade. This is Bloomberg. U.S. President Trump says he will meet Chinese President Xi Jinping on the sidelines of the upcoming APEC summit, following a highly anticipated call on Friday. He also hailed progress toward finalizing a deal over TikTok, signaling a potential breakthrough in ongoing negotiations.
And joining us now for some analysis, Alicia Garcia Herrero, chief APEC economist at Natixis, to unpack what this means for U.S.-China relations, the global economy as well. So, Alicia, we just heard Shery mentioning how the hopes is that this paves the way for a U.S.-China trade deal. To what extent do you think this helps to mitigate the risk for the global economy as we wait to see tariff pass through?
Well, partially because a lot of tariffs have already been imposed on other countries, and that's not going to be lifted. The only thing that we could see coming down, in my view, is probably India and Taiwan. Taiwan is on a temporary 20% tariff, and there is good chances that it will be lowered. But other than that, the rest of the tariffs will remain. So, in other words, even if we have a deal with China, we are in a tariff world, and we're going to remain in a tariff world. So companies have to realize this.
And as we wait for perhaps companies to realize this, we're watching out for hard data as well, including from South Korea. Trade data for the first 20 days hopefully gives us a glimpse on global demand, chips exports as well. What are you seeing as the trajectory for the rest of the year?
I think we already have some signs, and you're right. This Korea has the best kind of forward-looking data. It's very quick to see what's going on, in the shortest space of time. But we already have Singapore. I mean, past data has been horrible, and I think this is what we're getting. The exception is actually again Taiwan, because the chip cycle is different, especially high-end chips, GPU-related chips. There we still see a lot of demand, but we could be surprised by South Korea, as you mentioned, because we already have the ban on NVIDIA GPUs from China. So we could start seeing that even for these very demanded high-end chips, we may see a different trend, and not because of tariffs, but because of outright prohibition this time around from China. This is also affecting trade. So, everything we hear actually is negative. Even if we get a trade deal between the US and China, negative on trade, negative on global value chains. That's where we are now.
Alicia, we often talk about a two-track economy when it comes to China. Could that two-track economy also be sort of understood as this exuberance over IT, tech, these semiconductors, and really Beijing investing in these sectors, as opposed to the real estate market that continues to drag the broader economy?
Yes, absolutely. And I would put even more sectors in this second bucket. I would argue that China is in a dual economy, as you said, but it is government driven. It is not so much that on its own, China can actually use this first part of the economy, as you mentioned, IT, semiconductors, just to run the whole economy. We know that because times have been absolutely wonderful in terms of exports of all of these IT related, or if you want green tech related also sectors, but it hasn't been enough. We know that companies aren't making any money because they are in this involution situation. They need to basically fight to get market share by cutting prices and cutting their markup on top of everything, meaning their actual room to increase prices is also shelved. So because of that, I think you cannot just run an economy of the size of China with one part of the economy. It's just too small. We need to remember the real estate sector was actually much bigger than the IT and semiconductor sector in China. So it's just not enough. And that's why I think that these efforts will eventually have to shift to the rest of the economy.
When are we going to get a monetary boost? I mean, we get loan prime rates, nothing expected for today, but then could we see something later in the year?
We're expecting 2 cuts, 10 BPs each. I realize this sounds little compared to what the Fed might be doing. So in terms of, the interest rate differential, actually, China will hold ground, but we do expect some cuts because, as you said, the rest of the economy, and increasingly even the export sector, to be frank, is showing that it isn't as resilient as it used to be in the first half of the year. So yes, we do expect cuts, not too many, because again, China has to make sure that it's not a extreme capital outflow coming from a very large interest rate differential with the US. So they have to keep it there. And that's why we only have 2 10 BP cuts up to 2026.
Even as we talk about cuts for the Fed, for China, for the BOJ, it's about hikes. And we've been seeing how the markets look relatively resilient despite what the BOJ signaled last Friday. To what extent do you think is that providing some form of cover for quantitative tightening or rate hikes from the BOJ?
Well, you're right. The BOJ somehow is going against the tide because we see Bank Indonesia cutting. I mean, many, not only the Fed. Yeah, it's like everybody's saying, "Oh, the Fed is cutting. There you go. I have some room," and everybody's worried about tariffs. So everybody's kind of in that easing mode, except the BOJ. But we need to remember the BOJ is already in an exuberantly, excessively, in a way, lax mode because of its humongous balance sheet beyond the very low level of rates. So in a way, it goes without saying they need to tighten a little bit because they have no room. If anything happens in Japan, the BOJ has no room. This is why I think the BOJ will need to hike this year, maybe just 25 BPs. This is what we have. But it's a signal that the BOJ is back to play the game of a central bank that has some room. And this brings us, of course, to quantitative tightening. There's no better case for the BOJ to start disposing a little bit of those stocks that it bought. And there's no better time because the market is at its top, and the Nikkei is just expensive enough for them to stop without a consequence.
We'll be watching those ETF sales. Alicia, good to have you with us. Alicia Garcia Herrero of Natixis. We have more ahead on the Asia trade. This is Bloomberg.
I thought the Fed's decision was a good one. This looks like a sequence of 3 moves in a row through the end of the year.
Would you have voted for 50 this week?
No, I don't think so.
We have to study constantly this interaction between the labor market and inflation. But that doesn't mean we're immune to the changes that AI could be creating in the labor market.
Former St. Louis Fed President Jim Bullard and San Francisco Fed President Mary Daly speaking after last week's quarter-point rate cut. Let's bring in Bloomberg MLive strategist Mark Cranfield for his insight. So, Mark, we're seeing a bit of a feel-good factor from the Fed last week.
Yeah, I think that the big difference here is that they've set the dot plots and they've set pretty aggressive targets for interest rates to come down over the next couple of years, even through year end, as the speakers were saying earlier there. In the past, there's been times when this has been seen as a bit of a theoretical exercise. Yes, the dot plots point to certain numbers, but traders have a disconnect from what they see in those numbers. That is not the case this time around. Everybody is aligned in expecting further Fed interest rate cuts and probably a move towards 3% Fed funds at the end of the cycle. Helping this, of course, is the fact that we now have Stephen Mirren on the Fed board, and he's been out over the weekend speaking, and he endorses this idea of further rate cuts going ahead over the next few months. And it's something we're likely to see repeated aggressively by other Fed speakers. So even though it sounded as though there was a little bit of pushback in the press conference last week from Jerome Powell, the other speakers are probably going to sound more dovish than they were during the statement and the press conference. So everything is aligned for the world and investors to believe that the Fed is on a path to accelerate interest rate cuts. It took a long time before they delivered another one last week. It will not be the case for the cuts ahead. There will probably be successive meetings, 25 basis points at a time, and it may well go through into the early part of next year. That's a great underpinning for the mood in global markets.
Does that also mean that the risks are higher, given that investors all seem to be aligned and in consensus about monetary policy moves, especially at a time when trade seems to be now a thing of the past? I mean, we have more positive sentiment around U.S.-China trade negotiations. So is the biggest mover still going to be monetary policy in the next few months?
It's probably the biggest single risk to the mood in financial markets really is the US-China trade situation. For now, things look nice. There's a truce between the two in terms of tariffs. They keep on nudging forward. The talks are going on. They are not yet making significant progress, but at least they're still talking. President Trump announced that he's planning to meet with President Xi at the APEC meeting next month as well. They also seem to have found a way to solve the TikTok problem. So there are small, incremental, positive steps being taken between the US and China. Should that fall apart, should they go back into the kind of squabbling and tit-for-tat tariff moves that we saw earlier this year, which culminated in the Liberation Day sell-off in April, if we get anything like that, all markets are at risk. We could see a massive sell-off again across the board in assets, stocks, bonds, the US dollar, everything. For the moment, that is not what investors are expecting. They think that the US and China are going to continue with this playing nice with each other, and that is underpinning everything else in global markets.
Mark, we're also seeing Japanese markets looking pretty robust, all things considered, even from what we heard from the BOJ last week. I mean, what is your sense of specifically what this is going to mean for the yen moves, which until now still seem pretty range-bound?
We finally came to a Bank of Japan meeting where they looked as though they took a big step towards signaling that October is going to be live for a 25 basis point increase. They've been playing around with that for some time. It looks as though everything is falling into place. We had two dissenters. They wanted an immediate 25 basis points hike. That didn't happen, but in the press conference, most importantly, Governor Ueda did not dial back on that slightly hawkish mood that was prevailing after the statement. Don't forget, they've also announced they're going to start reducing they own a lot of ETFs and REITs. They're going to start selling those back to the market in a very gradual process. But again, it's another significant step in removing unconventional interest rate policy, which is what Ueda pretty much promised when he first came in as governor of the BOJ, and he's getting there. So the markets, they can absorb. The ETF sales are going to take a very long time. Equity market in Japan can live with that. Bond traders will be satisfied that at least the inflation, which has been very sticky in Japan, finally the BOJ are moving towards that. It's supportive for the yen, but don't forget it's in the context of the US market as well. It is 25 basis points is not a huge increase when yields are still much lower in Japan than they are in the rest of the world. But at the margin, it will help the yen on cross rates, probably against the euro and the pound.
Our M-Live strategist Mark Cranfield there with what to watch on the markets as we continue to watch also the leadership race here in Japan, given, of course, its monetary policy implications as well. The ruling LDP officially beginning its leadership race with a vote set for October 4th to decide who will replace outgoing Prime Minister Shigeru Ishiba. After losing its majority in both houses of parliament, the party is looking to freshen up its leadership. Economy and government reporter Erika Yokoyama joins us now here in the studio. And Erika, we finally have some more outlines of economic policies by the major candidates, the latest one coming from Shinjiro Koizumi.
That's right. Yeah, Koizumi just had his press conferences to explain about his policy on Saturday. And actually today it's an official start day for the campaign, actually. And, including Koizumi and Takaichi are planning to deliver policy speech, and the market is closely watching whether these candidates will show stronger preference over spending compared to these press conferences over the past week, because that could add pressures on yields. And in today's policy speech, we are likely to see multiple different agenda, including defense, national security, and also, importantly, how they are trying to work together with opposition party. Now, that's as you said, the LDP lacks the majority in both chambers. But as you said, common focus should be the economic policy, as they are offering alternatives to the unpopular cash handout proposed by the LDP before the upper house election. For example, Koizumi and Hayashi are emphasizing wage growth measures, while Takaichi said she's looking for tax credit with cash handout. So, and some others are also saying that they are going to review income tax system as well. And so the market is also closely watching how they're trying to finance these policies and measures as well. For example, Koizumi said he's planning to finance the economic package with the tax revenue surplus, but it's yet to analyze how realistic these visions are.
Yeah, it would be interesting to see how this corresponds to perhaps some fiscal consolidation, given the different policies from these various contenders. What are we seeing in the polling on potential frontrunners?
So far, the local media polls suggesting Takaichi and Koizumi are leading the polls, and Hayashi, the chief cabinet secretary, coming to the next, and Kobayashi and Motegi is following them. So far, I'm looking at their policy actually, but it seems like they are trying not to standing out too much, because remember, all of them are loser to the outgoing Prime Minister Ishiba, right? So they have apparently learned from their previous mistakes and experience. So, for example, Takaichi, who pushed expansionary fiscal policy last year, this time is clearly toning that down. She's shift her stance by rejecting, distancing herself from costly and the consumption tax cuts on food, for example. And Koizumi as well, he lost momentum last year after calling for drastic labor market reform. And this time he clearly avoiding these reformist policies as well. So I feel like it's still hard to guess, given that I don't really see the clear differences between the parties.
It was interesting that Takaichi didn't necessarily mention anything about the Bank of Japan, because last year, remember when she called hikes back then stupid. Is that her trying to distance herself from some of the comments that she made in 2024? And what are the implications more broadly for the economy, depending on who wins?
Sure. So yeah, I think one of the reasons is Takaichi's kind of distancing from the monetary policy mentioned could be the learned lesson from the last year. But at the same time, I think it is more difficult for the candidates to now advocate for EC policy, or even slow down in the BOJ's late hike path, because inflation has been above the BOJ 2% target for over 3 years and a half, and real wages gain turned positive as well. And we have a Trump administration as a U.S. counterpart. Then clearly he's criticizing the trade deficit. So probably the new leader doesn't want to look for weaker yen for others as well. And, Friday, BOJ kept rate unchanged, but still, kept opening the possibility in October hike. So any remark factors possibly hindering this path probably are market moving, I think.
Yeah, the macroeconomic backdrop so different from last year. Erika, good to have you with us. Erika Yokoyama, our economy and government reporter here with what to watch for the LDP race that's now heating up, of course, campaigning starting today. And we're watching also another story in South Korea. The ruling Democratic Party there reportedly aiming to abolish a breach of trust law criticized by business leaders. Chosun newspaper citing the party's floor leader saying they plan to repeal the law during the September National Assembly session. South Korean businesses have called for abolishing the law, which allows criminal punishment against executives or directors.
Let's take a look at how oil prices are faring as well. Remember, it clocked a modest drop just last week of about 0.5%, and traders are now gauging the impact of EU moves on Russian supply and strikes by Ukraine on the OPEC Plus members' energy infrastructure. We're seeing oil a little changed at the moment. In the meantime, UN Secretary-General Antonio Guterres says that the organization is preparing emergency measures to slash global peacekeeping operations if it can't plug a funding gap created by the U.S. Guterres told us he will meet with President Trump this week as global leaders gather for the General Assembly.
We have been doing enough measures in the implementation of this year's budget to be able to move ahead, and we are preparing, if necessary, a series of emergency measures to drastically reduce our peacekeeping operations, which again is not a problem for the UN. We shrink, we reduce what we are doing. The problem is that those peacekeepers, that many of them are in places where there is no peace to keep, with terrorist groups, with armed groups, they are sometimes the last resort for the protection of civilians. And those are the ones that will suffer. So the UN can move on, but the people that we support will suffer.
As the US rather steps back or takes on this different role, are there member states who are doing more? I think of China and the work that you've done to get China to participate more in this body. Are they picking up the slack? Are they doing more?
No, the contributions of China have not changed, and China is not going to pay for what the UN doesn't pay. What is clear for me is we are moving into a multipolar world, and that is the reality. People usually talk about the US and China, but I look at India, I look at Indonesia, I look at Vietnam, I look at Brazil. Every single day, these emerging economies represent a larger share in the global wealth. Every single day, they have more influence. And we need to adapt our institutions. We need to adapt the UN, the Security Council. We need to adapt the Bretton Woods institutions. We need to adapt all the governance mechanisms that exist in the world to that reality. This is no longer a multipolar world. This is no longer a bipolar world. This is no longer a unipolar world. This is at the present moment a chaotic world, but moving into a multipolar world. And we need to build the multilateral institutions of the future. That's why we are reforming the UN. And let's not forget, there was multipolarity in Europe before the First World War. In the absence of multilateral institutions, the result was war.
UN Secretary-General Antonio Guterres speaking to our colleague David Gura. We have more ahead. This is Bloomberg. Take a look at how we're setting up for the market opens at the top of the hour. We are seeing a little bit of a reversal from the Japanese yen gaining ground after the BOJ held steady last week. We are seeing a little bit of weakness. And you can see on that chart on the right how some of those banks were major beneficiaries of bets on normalized rates, with the BOJ signaling that they're open to rate hikes later in the year. So we actually saw the Topix Bank Index gaining more than 120% or so since the start of 2023. But some of that rotation out out of bank stocks and into real estate that relies heavily on debt right before the Bank of Japan policy decision. But given that those rate hike doors are still open, we might see a little bit of a reversal on that. But joining us now is Kazuo Momma, executive economist at Mizuho Research and Technologies. He previously served as assistant governor at the Bank of Japan, and always good to have you with us, especially to delve into the BOJ policy decision. Are we seeing further progress towards normalization, and when could we expect that much-awaited rate hike to come?
Yes, you're right. I think there is some progress toward normalization of monetary policy further. But at the same time, the BOJ, particularly Governor Ueda, is really concerned about the possible impact from tariffs on Japan's economy. Actually, there are a lot of channels, but particularly the impact on global economy, through which Japan will be affected indirectly. That is the key point BOJ is now looking at. So in order to clear that view, I think it takes more time, maybe a few months more. So October meeting is open, but still, October meeting decision for rate hike is not very much likely, in my view. So it could take more 2 or 3 months.
Maybe January.
Maybe January. January is my call, actually.
So, what do you make of the ETF sales? Will that make a difference to market volatility?
Doesn't much. Actually, decision to set out the ETF on the balance sheet of BOJ is very technical adjustment, technical exit from the huge monetary easing earlier, much earlier. They actually, the decision came out on Friday was really trying to minimize any impact on the market by selling the ETF from BOJ balance sheet. So actually, BOJ said that it could take more than 100 years to sell them all out to the market. So this is a very slow pace, doesn't have any much impact on the market.
It sounds like the BOJ sort of learned its lessons from previous times when it spooked the markets in a way. But what is your sense of, given how inflation has been faring, do you think the BOJ is behind the curve?
Well, that is a very important point and a very controversial point of the whole discussion about the monetary policy in Japan right now. As a matter of fact, CPI inflation has been above 2% over 41 months. 41 months for more than 3 years, three and a half years, actually. So this is the good argument for the BOJ officials to be thinking about potentially they could fall behind the curve. As a matter of fact, there are 2 dissenters last meeting, and one of them, Tabura, said that the behind the curve is the one concern the BOJ should be paying attention to. That is the reason why Tabura actually dissented in favor of an immediate hike rate. But majority of the view is that most of the inflation right now is temporary in nature, because most of them are coming from food prices, particularly rice prices. And the monetary policy can't do anything about that. And also, to the extent that the rice price is already plateaued, I think the BOJ think that the year-to-year change of inflation associated with that will be fading out in the near-term future. So I think the BOJ is trying to make a balance between the inflation pressure and also uncertainty over the economy coming from the abroad.
It's interesting you raise that, because rice prices have also turned into a sort of political issue.
Yeah.
We are in the midst of an LDP race. How do you think the policies might play out from these various contenders?
Yeah, that is also a very interesting point. But actually, most of the candidates, major 5 candidates of the LDP leadership election, they don't have anything, they don't say anything about the monetary policy so far. So generally speaking, they are trying to send a neutral signal to the BOJ. So from this point of view, BOJ has a maximum free hand. So this time around, even Takaichi, the most expansionist candidate, still doesn't say anything about monetary policy. Last year, she said about it would be absurd to raise interest rates, but this time she doesn't say anything about that. So I think Ueda-san have a maximum free hand.
How does the Fed factor in? Because if you're thinking the dot plot implying 2 Fed rate cuts, and then you have the Bank of Japan normalizing policy and hiking, could you see a spike in the Japanese yen that might alter the thinking of the BOJ's trajectory?
Well, it depends on the background behind the rate cut of the Federal Reserve. If the Federal Reserve is really concerned about the possible aggravation in the labor market, and actually if it does take place, I think the overall sentiment about the market is that the dollar bearish. But at the same time, if the U.S. economy is really nicely soft landing, and the BOJ is still very cautious about the interest rate hikes. That could send a signal that the yen could be depreciating further. So I think in combination, what happen to the U.S. economy and how cautious the BOJ is going to be in terms of rate hikes.
I understand your point on your January call for the next rate hike, because it's not just about monetary policy in the U.S., but also you would gauge what the Shunto wage negotiations could do in the spring.
I think that is a very important point, because the last thing the Ueda-san wants is that the Japan's economy is disrupted by tariff uncertainty in a way that the wage price dynamics is going to be ending by the next Shunto. So Ueda-san would like to see current ongoing price wage dynamics is going to be further supported by next wage negotiation.
We wait to see this virtuous cycle. Momma-san, great to have you in the studio, and thank you for your insights. Kazuo Momma is executive economist at Mizuho Research and Technologies. Catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo, and subscribers can watch live on the terminal using the TV Go function. This is Bloomberg. And here are some of the market moves we could be expecting when trade opens in Australia, Korea and Japan shortly. Watching Samsung after the Korea Economic Daily reported that it recently passed NVIDIA's qualification test for its 12-layer HBM3E product. We'll see how much that will factor into the stock price. We know that volumes of those chips are expected to be relatively small, as Samsung is the third supplier to secure approval following SK Hynix and Micron, but also checking some of these currency moves, Shery.
Yeah, especially on the Japanese yen, because it's falling against the U.S. dollar. It actually rose after the BOJ held steady on Friday, but it's pared back those gains with the greenback seeing some strength. And we will be watching those JGB yields as well, because they have been rising on expectation of BOJ rate hikes as well. The market opens in Tokyo, Seoul, and Sydney are next. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens. And Shery, of course, this is a big week in terms of the UNGA that's set to take place. But we also have that feel-good factor from the Fed last week and that Trump-Xi phone call on Friday.
Yeah, so we are watching U.S.-China trade negotiations. We are watching, as you said, also the feel-good factor from the Fed, dot plot implying 2 more rate cuts to come this year. But big week also because Avril is here in our Tokyo studio.
Yeah, so what better week to take a look at how these Japanese assets are faring at the start of trade as we wait to see how, this LDP race, Japan's leadership is going to shake out. Of course, we're going to see these contenders play some of their applications later today. And we're seeing for the moment, after the Japanese stocks, of course, following the reaction of the BOJ actually managing to pare back some of those losses today, maybe from the U.S. rally on Friday. This is the handover, and this is what it's looking like in Japanese markets, starting the week, indeed the day, on the front foot, 0.4% higher. We've been seeing the dollar-yen looking pretty range-bound. We're even seeing a bit of a tick-up on the Japanese 10-year, interestingly, Shery.
Yeah, we are seeing a little bit of those reversals from the moves that we saw after the BOJ held steady. But take a look at how South Korea is also coming online, because we're seeing that 20-day exports for this month, year-on-year growth of 13.5%, which is a real boost coming from the surge in semiconductor shipments that we've seen in South Korea. Also, for the first 20 days of imports, rising 9.9% year-on-year, leaving a trade surplus of more than $1.89 billion. And this coming at a time when we're keeping our eyes on Samsung for today's trading session as well, passing NVIDIA's qualification test for its most advanced chip, according to local media. So we'll be watching some of those gains perhaps coming from the semiconductor side of things, as we're watching the broader tech sector, of course, given those ongoing trade negotiations negotiations between China and the U.S. and that exuberance over AI. Take a look at how Australia is also coming online, because we are expecting inflation numbers out of Australia this week as well. We are now watching the Aussie dollar holding at that 65 U.S. cents level, the ASX 200 gaining 0.4% right at the open. But oil in focus as well, as we do have more of that geopolitical headlines that could come through as the UN General Assembly gets underway this week, Avril.
Yeah, that is a complicated backdrop. So let's get some analysis on how this is going to affect things cross-assets. Bring in Anna Wu, cross-asset investment specialist at VanEck, for us. So Anna, really good to see you. First off, as Shery was just highlighting, the UNGA takes place this week, but we also have these developments between the US and China. How are you positioning amid these cross-currents?
Hi. Hello from Sydney as well. So I think in general, the US-China trade talk round 3 is shaping up to be more of a bullish one, really, to what we have seen so far. We haven't seen a lot of details really released from the China side, but from what we have seen, Trump that's been highlighting the TikTok deal, as well as, from Premier Li Chang, the win-win model going ahead. I think in general, that's sparking up to be more of a bullish setting for, in general, sentiment and equities. So I think in the short to medium term, the growth factor is still going to be quite prominent in the Asian market and broader APEC market as well, to support the equities performance. But in the longer term, I think it comes back to that data focus, as well as how the tariff is actually going to show up in the US economy, and then the broader world economy in terms of inflation and the growth weights as well. So it will be a bit of a short to medium term view and a longer term view.
What about medium-term view on U.S. assets in particular? I mean, for much of this year, investors have also been grappling with U.S. policy uncertainty. That's toned down a little bit, but then we're seeing how Trump's talking about H1-B application fees. Does that worry about U.S. exceptionalism resurface? How does that affect your allocation?
Yeah, I think exactly to your point, a couple of the Trump's policies have been putting weight on the U.S. labor market, especially from a immigration perspective and from a foreign skilled worker perspective. The H1-B extra 100K cost that's put on a lot of the skilled foreign workers is going to have more of an implication on a lot of the international companies based in the U.S., including the large tech players such as Amazon. So I think in the medium term, we're probably going to see a more interesting landscape in the U.S. labor market, where the labor market can be tight and loose at the same time. So that can be having implications on the medium-term growth trajectory of how we see the U.S. equities going. So U.S. exceptionalism, I think it's been losing steam so far, we have seen in 2025 and going forward. So I think a diversification play in this setting makes a lot of sense. Actually, at VanEck, we are very bullish in the emerging market space, and because a lot of the macro headlines and tailwinds are lining up for this part of the market. This part of the market has been under-owned for years, and a lot of the major economies in this size, such as India, such as China and South Korea, in the recent years are reaching to an end of their painful economic restructuring. They've done their policy adjusting, so that's where we're seeing the bullishness.
Let's talk a little bit about India, because one of the largest users of that H1-B visa into the United States are Indian tech firms. At a time when we're seeing India-U.S. trade relations also take a bad hit right now, how viable are these long-term opportunities in this country?
Yeah, very interesting question. In India, we're bullish long-term, just because it has a very prominent growth trajectory there. The GDP growth so far is still staying at 6 to 7% range. I mean, you don't really see that type of growth anywhere out of the developed markets. So that's been the fundamental case. EPS growth-wise, India shows a very healthy case as well. So despite the US and India trade, frictions in the recent term, has sparked a bit of a worrisome sentiment in the equities market. But long-term wise, we're still very healthy in that part of the market. And as we are speaking, US and India are back to talking terms later in the week to renegotiate some of the trade deal terms. So I think that largely is going to shape up to be more of a bullish one. We've already hit, in my view, the rock bottom when India got slashed a 50% tariff rate. So any step in renegotiation on top of that will make it more bullish case for us.
Bottom already in Chinese assets. We have the loan prime rate decision today from the commercial banks across China, but of course at a time when we're still seeing the domestic economy struggle.
Yeah, I think China is a very different story here. The broader economy, we still haven't yet to see a major comeback of the more substantial economic data. However, if you look at the two strategic sectors that China equities are bolting on more right now, one is technology and one is healthcare, and to a stretch of consumer discretionary. These sectors are getting the policy blessing, and also in a very calculated way, Chinese banks and also PBOC are making the monetary policy more and more looser and more supportive for just general corporate growth. So we are very bullish in terms of the China equities outlook, medium to long-term outlook, in particular of these new economy-centric sectors such as tech and healthcare and consumer discretionary.
And now you cite Chinese monetary policy. It's interesting also, following on from the BOJ last week, we've recently also been seeing there's a bit of a split between what asset managers and what hedge funds think about the moves in the yen. Do you see that divergence can widen? Is that something that you think will continue?
I think I'm very much of a divergent sort of perspective as well in terms of Japanese yen. You've got a couple of driving forces of this particular volatile currency. You've got the internal monetary policy, even though BOJ has held steady last week, but we all know that's a hawkish hold rather than an end of a tightening cycle. So that will put constant pressure on yen, but at the same time, the overall economic growth, uncertainty, tariff impact that hasn't yet materialized in the economy, as well as the Fed's, speed and extent of rate cut, will be putting different pressure on the yen. So that's why I think very likely it's going to have a volatile Q4. But when we were talking about Japan, right? Equities is facing a different story because, it doesn't really matter who's going to be the next PM. Largely, the fiscal expansion is not going to stop. And also, the BOJ hike is more going to be a managed route rather than a more of an aggressive route, and also the domestic tax cuts and also the pro-growth economic policies will be pushing the equities higher. So that's why I think while yen's going to trade largely volatile, but on the equity side, we're actually more constructive on that front.
And Wu, good to have you with us, cross-asset investment specialist at VanEck, as we continue to follow all of those tech stocks across the Asia sector. But of course, is Samsung the one that we're watching very closely at the moment, because we've heard from local media that the company passed NVIDIA's qualification test for their 12-layer HBM3E product. Volumes, though, are expected to be quite low, given that Samsung is the third supplier to secure approval from NVIDIA, following, of course, SK Hynix and Micron. You can see Samsung gaining more than 3.5% at the moment after already already 50% gains year to date, but compared to its rival SK Hynix, which has gained more than 100% in the past year, of course, really dwarfing those gains. We have more ahead on the Asia trade. This is Bloomberg. President Trump's plan to impose a $100,000 fee on the H1-B visa program has triggered confusion for corporate America and warning for workers. That's even as the White House clarifies that the fee will only affect new visas and not renewals or current holders. For more, let's bring in Bloomberg News Desk editor Jill Deasy's not only confusion for corporate America, corporate world at this point, because we know that a lot of Indian tech companies use these H1-B visas. So how consequential could this change be?
Yeah, that's right. I mean, this has the potential to be pretty enormously consequential here. I do think that clarification, certainly on this not impacting renewals, does help somewhat. But if you're looking at pretty dramatically changing the H1B program and how it's used, I mean, again, when you look at the number of tech companies that use this, Amazon in particular is a pretty significant user of the H1B program. When you look at the number of Indian tech workers in particular, I mean, that could be potentially very disruptive. But it does seem like what the Trump administration is ultimately trying to achieve here is to move more of these types of jobs into the hands of, more highly paid, incredibly high-skilled workers. Because if you're imposing, an application fee of $100,000 on these types of visas, I mean, that really, really significantly changes the playing field here.
Jill, in terms of how this complicates things, I think India already has been reacting and saying they hope the U.S. addresses the disruptions, not just to companies, but to families as well. But what have we been hearing so far from some of these U.S. tech giants that are, going to be implicated?
Yeah, I mean, Avril, I think, again, because there's just so much confusion about how exactly, this ultimately plays out, still waiting to see, how some of that big reaction is ultimately going to be in play here. But obviously, again, as we've been discussing, this does impact, U.S. tech companies quite a bit. One other thing, though, that I really do want to mention here is the possibility of some legal challenges to this type of law. I mean, or this type of restriction. You do have the fact that the vast majority of worker visas for workers that are coming to the U.S. to work really sort of costs in the neighborhood of $5,000 to $10,000. So the idea of increasing the application fee for this particular type of visa to $100,000 does, I think, sort of bring into sort of question whether or not this is something that ultimately is met with a lot of legal challenges. Again, I think that's something that kind of remains to be seen here. And then there's also the question of whether some of these other types of visa programs that the Trump administration announced ultimately get approved. We did hear, this idea of sort of a Trump card golden visa sort of program for people to come in on a residency program to the tune of, $1 million or so. So, I mean, you've got a lot of sort of questions over how exactly the Trump administration is really remaking its immigration programs here. And ultimately, I think, there's still a big question, particularly a fairly sizable legal question about how much of that actually comes into practice.
Jill, you make a good point. Thanks very much, Bloomberg News Desk editor Jill Deasis for us. Now, some of the stories out of the U.S. we're tracking as well. President Trump has proclaimed Charlie Kirk a martyr for American freedom as he spoke at a memorial ceremony for the murdered conservative activist. Tens of thousands of people gathered for the event in a stadium in Arizona. Erica Kirk also spoke, saying she forgives the man who killed her husband. She promised to work to continue Kirk's legacy by adding more campuses and students to the conservative movement he founded. President Trump says the U.S. government shutdown is likely, citing a stalemate between his party and the Democrats. Senate Democrats and Republicans each blocked the other party's rival plans to provide temporary funding, moving closer to a shutdown on October 1st. Senate Democratic leader Chuck Schumer is urging President Trump to negotiate.
We are hoping that he will negotiate with us.
And if he doesn't?
So far he hasn't. And we've had two bills in the House and Senate, and neither of them have passed. Our Democrats are firm. We need to get something done to relieve the distress the American people are in.
Japanese assets reversing some of those moves that we saw right after the Bank of Japan held rates steady last week. We're seeing the yen losing ground against the U.S. dollar. It actually rose after the BOJ's decision on expectations of future rate hikes to come from the BOJ. Same idea for Japanese yields also, which were higher. But we're seeing a little bit more downside pressure in today's session. The Bank of Japan has also announced selling its ETF holdings as well. But of course, monetary policy also could be affected by what we're seeing in the political landscape. Japan's ruling LDP officially beginning its leadership race today with a vote set for October 4th to decide who will replace outgoing Prime Minister Shigeru Ishiba. After losing its majority in both houses of parliament, the party is looking to freshen up its leadership. Economy and government reporter Erika Yokoyama joins us here in the Tokyo studio with the latest, and we've heard some of those economic policies coming from the likes of Shinjiro Koizumi, from Takaichi as well. What will the markets be focused on?
Sure. So today is the official launch of the campaign, right? And, market is closely focusing on whether these candidates will signal more their calls for more spending because, that will add the pressures on yields. And their policy focus could be slightly different from each other, but I think the common focus should be the economic policy, as you said. For example, Koizumi and Chief Cabinet Secretary Hayashi emphasized the wage growth measures as their main policy, while Takaichi suggested on tax credit and some cash hands as well. And some other people are saying review an income tax system or investment in key areas. The question is whether which measures are actually really costly and it's how realistic to finance these measures as well. And of course, the other agenda includes defense policy and how the party, how they are trying to work together with the opposition parties. Now that the party lacks the majority in both chambers, then if any policy sounds more costly, I think it's the market moving.
So is that what's been standing out in terms of some of these policy pledges from candidates?
I think so, but at the same time, I feel like they are, compared to the last year, they are a little bit toning down their stance. That because, they are actually the loser to outgoing Prime Minister Ishiba in the last year's race, right? So, for example, Koizumi last year pushed for some reformist policy, including drastic labor market reform, but this time he just toning down. Takaichi as well, she's known for pro-stimulus or easy market, the monetary policy advocate. But she's not really referring to that so far. So I feel like it's actually really hard to make a guess at this point. And the recent poll suggests LDP voters are supporting for Koizumi, while general publics are in favor of Takaichi, but difference is kind of narrow and small. So and the both candidates are leaning towards the centrists, so I think it's still hard to guess who's winning.
You mentioned how Takaichi hasn't necessarily mentioned monetary policy, but what could be the broader implications for the BOJ going forward, especially given all of the fiscal spending that has been talked about now?
Right. So I think it's actually yet to be seen. I've been listening to old candidates' press conferences and looking through their policy pledge, but no one really made a clear statement so far about the BOJ's election. And for instance, Koizumi just said the BOJ and government should work closely, suggesting consistency. And others are, including Hayashi and Motegi Kobayashi, are saying the monetary policy is the job of the BOJ. Government shouldn't be touching on it. So I think that's kind of, they learned from the last year some market moving remarks from the last year. And at the same time, the economic situation is quite different compared to the last year. Now inflation is in place, real wages turning positive gradually, and now we have a Trump administration in the U.S. Then the new leader probably don't want to weaken the yen further. So, BOJ last week kept the interest rate steady, opening some options for October, but any remarks that will try to hinder this path will be the market moving too.
Yeah, Erika, what a difference a year can make. Really great to have you in the studio with us on what's going to be a very busy day for you. Thank you so much. Our economy and government reporter, Erika Yokoyama. More ahead on the Asia trade. This is Bloomberg.
Australia, Canada and the UK have formally recognized a Palestinian state ahead of the UN General Assembly meetings this week. Leaders of the three countries call it a coordinated push for a two-state solution. The move has drawn criticism from President Trump and Israeli Prime Minister Benjamin Netanyahu, who argue that it rewards Hamas and threatens Israel's security.
In the face of the growing horror in the Middle East, we are acting to keep alive the possibility of peace and a two-state solution. That means a safe and secure Israel alongside a viable Palestinian state.
Ahead of that announcement, we spoke to United Nations Secretary-General Antonio Guterres, who also reaffirmed his commitment to a two-state solution.
I think it's a very important pressure on Israel to understand that they cannot move on with the annexation of West Bank and that they cannot move on without accepting the idea that we need an immediate ceasefire in Gaza with the immediate release of and unconditional release of all hostages and with free humanitarian access in Gaza. And especially to say this, that for me is very important. People say, oh, but the two-state solution is very difficult. Yes, but what's the alternative? A one-state solution in which millions of Palestinians either will be expelled or will be under a system of subjugation, discrimination, without rights. Is that acceptable in the 21st century? I think it is not. If we would move into that one-state solution with this kind of subjugation, there would be no peace in the Middle East, and extremism would rise everywhere in the world. We must stop that possibility, and the only chance is to convince. It will be difficult, it will take time, it will be complex, but we need to convince these two peoples that share the same land that they need to have two states living in peace and security with each other.
UN Secretary-General Antonio Guterres speaking to Bloomberg as the General Assembly begins in New York. And other global headlines that we're following, President Trump has renewed his call for European countries to stop buying oil from Russia, a demand he's linked to pressuring Vladimir Putin to halt the war in Ukraine. Russian forces have stepped up their attacks since the two leaders met last month in Alaska. Sources close to the Kremlin say Putin thinks military escalation is the best way to force Ukraine into talks on his terms, with Trump unlikely to act. The Taliban's top army commander has rejected President Trump's demand for Afghanistan to return the Bagram air base to U.S. control. He warned that any hostility would trigger a strong response, saying Afghanistan is governed by its own people and not dependent on any foreign power. This is Bloomberg.
We're going to have a very tight control. And look, it's an amazing thing that's been created. There's tremendous value with TikTok. And I'm a little prejudiced because I frankly did so well on it. You know, it got me numbers that nobody's ever even heard of before. So a lot of people want it. The young people of this country want it badly. The parents of those young people want it badly. And so we were able to work out a deal with China. And it's a very good deal for us. I hope it's a good deal for them.
President Trump speaking Friday at the White House following his call with his Chinese counterpart, Xi Jinping. Trump says he'll meet with his Chinese counterpart next month on the sidelines of the APEC summit in South Korea. And it follows their Friday phone call, which Trump says delivered progress towards finalizing a deal over TikTok. Let's bring in our chief North Asia correspondent, Stephen Engel. So, Steve, to what extent does this all move the needle on this deal?
Well, I think this weekend provided a lot more clarity on certain issues. It doesn't resolve the differences on trade and fentanyl and national security and other contentious sticking points in the U.S.-China relationship. But it is a good sign that they had what, by all accounts, a fairly cordial phone call where they were able to work out a deal verbally on TikTok. And maybe that can be used as a bit of a springboard to come and reach common ground on some of those more difficult issues. We have more clarity as well about when and where Xi Jinping will meet Donald Trump. Trump saying they'll meet on the sidelines of the APEC summit, which will be held in central South Korea on the 31st, I believe, and the 1st of November, 31st of October. So there's an opportunity there, obviously, for the two gentlemen to have their first face-to-face meeting of Trump's second term. So again, we're not necessarily kicking the can down the road, but it gives us a date where we can probably address those trade issues head-on with that meeting. Now, will Trump go to China? He says probably in the first part of 2026. So it doesn't look like they're going to be working in or shoehorning a trip into Beijing between perhaps the ASEAN summit and the APEC summit in October and early November. So again, that buys a little bit more time to tackle those contentious issues. Really quickly, because it was Friday's news, I'll run down some of the key takeaways on the TikTok deal. Essentially, they will have U.S. Americans holding 6 of the 7 board seats, and those 6 individuals will have national security and cybersecurity credentials. The 7th board member will be appointed by the parent company, China's ByteDance. They, however, that last board member will not have the security clearance. The consortium that is going to be taking this into American hands will be, because of investment from Oracle, Andreessen Horowitz, and also Silver Lake Management. And as we just heard from Donald Trump, the U.S. will retain very tight control over the app, including the algorithms, and Oracle will sort of act as the security provider. And we'll have to go from there. December 16th is the new deadline for this deal to be completed.
Steve, do we know anything about that U.S. congressional delegation in Beijing? What can we expect?
Yeah, well, this is the first such House delegation, high-level House delegation to go to China since 2019, so 6 years. I think there was a Senate delegation that did go a couple of years ago, led by Chuck Schumer. But House leaders there right now, led by the Democrat and former House Armed Services Committee Chairman Adam Smith. Basically, they've already met with Li Qiang, the premier, in the Great Hall of the People. So that's a good indication. Li Qiang calling it an ice-breaking trip that will further ties. Smith, he sort of echoed that sentiment, saying that they need to find a way to peacefully coexist in the world. He did, though, however, express concern, deep concern, he said, that the two militaries of the United States and China still do not communicate very well. That is something that has been an ongoing issue. Mill-to-mill dialogue has been almost non-existent. So again, there's still a lot of stumbling blocks to get this relationship on more healthy footing.
All right, Chief North Asia Correspondent Steve VanEck there. Let's actually discuss that relationship and bring in Susan Shirk, research professor at UC San Diego School of Global Policy and Strategy. She previously served as U.S. Deputy Assistant Secretary of State, and she joins us from Beijing today. Susan, really good to have you with us. So Steve was just telling us that there are still so many hurdles for this relationship to get on a healthy footing. How much does this TikTok deal help, and how much more is there to go?
Well, I'm not surprised that these 4 days of negotiations were dominated by the TikTok deal, because that was President Trump's priority. But I'm interested that China pragmatically treated this issue as a dispute to be negotiated rather than a matter of principle, which is how they had framed it previously. And I think that the positive rhetoric on the both sides and the fact that we now have a kind of schedule of meetings between the two leaders, which will be extended, not just a rushed meeting next month, because there isn't really the foundation of negotiations on other issues beyond TikTok to really produce any good results then. But they will have a series of leader exchanges, which is something that both sides wanted as well. So I think we're offering the best chance right now of an practical diplomatic series of negotiations that may be able to stabilize the relationship.
I was going to say, because the TikTok deal seems to be more defined, right? It's a problem that can be solved and a solution can be achieved. But a lot of the problems between the U.S. and China seem to be very fundamental in nature. When it comes to the Trump-Xi summit that we're expecting on the sidelines of APEC, do you expect any breakthroughs to come through that, given the challenging backdrop of these fundamental issues?
Well, I think one interesting question is whether or not the U.S. side has already committed to some reciprocal steps for what is essentially a concession from the Chinese side about transferring the algorithm to the U.S.-based TikTok. And if so, if there are already commitments on the U.S. side about, for example, lifting fentanyl tariffs, lifting previous tariffs from Trump 1, or undertaking some negotiations on other structural issues in the Chinese economy, then we might see some announcements about that from the South Korean meeting.
You're in Beijing,
on the other hand, it's possible that the Chinese, for reasons that I'm not sure I understand, have sort of accepted the American commitment that there will be reciprocity, but they haven't necessarily received any assurances yet as to what they will be.
Right. It's difficult to understand, but what is your assessment of perhaps maybe China at this stage is playing the long game when it comes to negotiations with the U.S.? Could that be part of this shift in the calculus then? And how do you think the Chinese president is, characterizing or thinking about this relationship with his U.S. counterpart?
Well, President Xi Jinping has a lot of problems at home, too. Right now, where the rest of the world is kind of awed by Chinese technology breakthroughs. But there are a lot of problems at home. Remember, they're also in the middle of an unprecedented purge of the military. All sorts of senior military officials, including the ones that Xi Jinping himself appointed, have now been replaced. So we really don't understand, I think, the depth of the domestic problems. And President Xi would like to demonstrate that he has the capability and even the pragmatism, like his predecessors, to manage the relationships with the United States. So I think he sees President Trump as much more flexible and open to doing deals and negotiating problems than previous presidents have been.
Susan, you're also in Beijing, where this bipartisan U.S. lawmaker gathering is sort of underway to meet Chinese policymakers as well. How instrumental do you see that as building trust between the two sides?
Well, I think, it's a positive sign. It's 4 members of Congress. 3 of them are Democrats. 1 is a Republican, but from the state of Washington, that's always been very much pro-trade with China. And of course, the chair of the group is a Democrat from Washington as well. But it's a good thing because they meet Li Chang. They will come back. Well, first of all, they will get to see the situation in China for themselves, which I think is really a valuable thing for American politicians to do, rather than having some image of what China is. And they'll probably be strong advocates of whatever negotiated solutions President Trump and President Xi are able to achieve.
And Susan, we're just getting headlines from Secretary Rubio saying that he will be meeting the Japanese and South Korean foreign ministers on the sidelines of the UN General Assembly, of course, in the United States. When it comes to Washington's Asia-Pacific strategy, how is this trilateral relationship playing out now in this pushback against Beijing?
Well, the Japanese and the Koreans are not opposed to American negotiated diplomacy with China. They very much support that. But they also want to see the Trump administration continuing to build this alliance structure that is the bottom line of deterrence if negotiations fail to achieve peace in Asia. So, and they're worried because of the trade, very uncertain and volatile trade policies toward these countries. They don't feel as secure and respected in their relationship with the United States as they previously did, for sure.
Yep. Some reassessment underway for them as well. Susan, great to get your analysis. Thanks for speaking with us. Susan Shirk is research professor at UC San Diego School of Global Policy and Strategy. More ahead on the Asia trade. This is Bloomberg.
We're counting down to the open in China after President Trump touted progress in relations with Beijing. The Chinese readout of the call struck a more measured tone. Let's preview how the market could be responding to all of these geopolitical news. Our equities reporter Charlotte Yang joins us with the latest. And Charlotte, of course, we have seen a massive rally in Chinese assets recently, but could we see a little bit of this optimism being derailed if we don't get any more progress on the U.S.-China relations?
Yes, Shery, so it's looking like to be a very busy, but I think great start of Monday for China stock traders after the signs of improving China-U.S. relationship following the Trump-Xi call. You have President Trump touting progresses with several issues with China, including trade, TikTok deal, all that. And while the Chinese side of tone seems to be more measured, still I think traders are focusing on how President Xi has expressed confidence that the nations will be able to handle any issues that arise. And I think more broadly, this helps just to put the geopolitical headwinds aside and help markets to continue to focusing on the blistering tech rally we've seen with China Hang Seng Tech Index now trading at the highest level since 2021 after they've added 40% this year. And more importantly, because of the grassroots AI developments we're seeing in China, investors are now focusing on the valuation gap, the discount Chinese tech shares still traded versus the U.S., and whether that gap is worth closing. And also today, we're also having a couple of single stock things to watch for Chinese EV maker NIO, the unveiled pricing of their new model, and also for the Chinese sportswear brand Anta, their brand Arc'teryx has created some social media controversy following their firework in Tibet. So that's also one to watch. So it's looking like a busy trading session today.
So a number of these firms, shares that you're watching out for, but you talk about this gap with U.S. stocks. At the same time, we know how Chinese retail investors, they seem to have no other alternative on where to put their money, along with these household savings and how that's going to unlock future stock climbs. What are you seeing?
Yes, so Chinese households are now tiptoeing back into the equities, and this is not driven by some sudden surge in risk appetite, but it's more because there's simply no alternatives. So if you're looking at the old pillars to Chinese household wealth, you're looking at property, cash, bonds. None of that is really delivering good yields. So let's start with cash. You have the Chinese major banks where they're offering for deposits is now at 1.3%. That's less than half of what they offer, back in 2020, and demand deposits is even mere at 0.05%. Bond is also not offering good returns, and property sector still remains in this long-term slump. And there's also not good returns from wealth management products as well as insurance policies. So that kind of background, that kind of setup is really helping a lot of the Chinese retail investors now looking back into the equities market after such strong performance we've seen onshore in Hong Kong this year. While the rally so far hasn't really been driven by Chinese retail investors, it's mostly driven by institutional flows. But Wall Street banks are pretty positive about the potential flow would be coming into the market. So JP Morgan is expecting $350 billion of coming from the Chinese households into the stock market through 2026. So if that really happens, that's a structural trend that could really reshape, the narrative of China's equity market and really start a retail-driven bull market.
Charlotte, thanks very much. Our Asia Equities reporter, Charlotte Yang, for us. Now, some other top corporate headlines we're tracking. Chinese robo-taxi operators WeRide and Pony AI are partnering with local companies to expand in Singapore. They've chosen one of the world's best mapped cities as a first stop for driverless ride-hailing in Southeast Asia. Singapore's Grab has also joined WeRide in plans to offer autonomous vehicles along 2 approved routes by early next year. The former CEO of New World Development is making a bet on digital assets. Adrian Cheng has launched ALMAD Group in Hong Kong, a company that plans to explore investments in a range of blockchain-related technologies. Cheng resigned as New World chief last year following the company's first annual loss in 2 decades. China's market regulator has opened an investigation into a Kuaishou technology unit over its live streaming e-commerce practices. State broadcaster CCTV says the case stems from suspected violations of e-commerce rules. The company says operations remain normal and it will cooperate fully with authorities. We have more ahead on the Asia trade. This is Bloomberg.
Thousands of Filipinos joined marches in Manila and other areas of the country on Sunday, protesting against what organizers say is widespread corruption within the government. Manila Bureau Chief Manolo Serapio joins us now with the latest. And tell us a little bit about the latest demonstrations and what really set it off.
Hi. So what happened yesterday was thousands of people joined in 2 rallies, 2 major rallies. Convergence points in the capital, Manila, and there was also demonstrations across the nation. Mainly, the point of these rallies is to point out the corruption that's going on with the government, particularly with the flood control projects that organizers say have exposed corruption within the government, and at a time when the country is one of the most disaster-prone hit in the world, and flooding is a major problem here, especially during typhoon season, which is what we're experiencing right now.
Yeah, the super typhoon Ragaza set to impact the Philippines. Manny, have these corruption allegations and the public uproar impacted the markets?
They haven't so far. The peso is steady. Largely steady against the dollar this month, and the Philippines main stock index is up nearly 2%. But business groups have slammed this corruption allegations that is being investigated by an independent body that the president has created. And we'll see whether the unrest will continue, whether the rallies will continue, and see if it seeps in through the economy and financial markets.
Manny, thanks very much for your reporting. Manila Bureau Chief Manolo Sarapio for us. And Shery, talking about the market impact, we're seeing that positive tailwind, right? We've been talking about this the whole morning, the feel-good factor from the Federal Reserve. And it's interesting how there's been a lack of volatility, I think, overall across assets, even when we look cross assets in Japan, interestingly, following the BOJ.
Yeah, with that
Friday.
Fed rate cut last week, dot plots now implying 2 rate cuts. So there was a lot of optimism about potentially more upside, right? Especially in emerging markets where we saw 9 sessions of gains already. Although perhaps some of those moves may be consolidating because treasuries are also seeing some consolidation and perhaps some of those reversals of those trades, especially across Japan as well as we head towards the China market opens as well.
That's right. And along with this, we're going to be watching how Chinese markets open, whether that feel good from the Trump phone call carries through into trade today as well. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.